Steve Peterson here with Infinity Investments, and welcome to our channel. We talk all things commercial and investment real estate, particularly for real estate agents, brokers, investors, and developers. And in today's very short video, we're going to be talking about what makes an ideal replacement property. I'm doing a lot of videos on 1031 exchanges because in our brokerage, we do a lot of 1031 exchanges. And the thing that keeps popping up is, what is an ideal replacement property look like? Now, the key is, first thing I'm going to say, this goes back to what your investment criteria is. Everyone has a very specific and unique investment criteria. And so number one thing is that, when we're talking about what does a better, replacement property look like, it's number one that fits your criteria. So breaking that down, my number 1A point is that the replacement property cash flows better than the relinquished property. The new property that you buy generates more income than the one you sold. Or the new properties that you buy generate more than the one property that you sold. I think that's like the number one thing that most people are looking for. And if it's not cash flow, it's some sort of return, whether that's internal rate of return or whatever it is, whatever measure that you're looking at, that you're earning more than you were before. I know it's a simple thing to think about, but a lot of people end up getting it wrong. And a lot of people end up buying something where they have more debt and less cash flow than they had before. And so that's not what we want to do. You want to make sure that when you're doing this deal, that it's like when you're playing Monopoly. 4 greenhouses, right? And you roll that up to 1 red hotel. Now, you're getting way more rent coming in when someone lands on your business. So that's the idea when we're doing these exchanges, is let's get a better asset. And it's something I try to drill home, and it's something I've learned from a guy who always just say that, is Ron Ricard from IPX 1031 Exchanges. You're not doing a 1031 to defer taxes. You're doing it to buy a better asset. The tax deferral is the icing on the cake. So number one, buy an asset that produces more cash flow than when you sold. Now, number 2 is you're buying in a better area, right? You may be moving up from more of a blue collar area to more of a higher end area, or maybe you're moving from one city that's kind of dormant to another city that's really growing and bustling. A lot of people have been leaving California and going for other growth markets, particularly Texas. Like Austin, Texas in particular. Looking at Austin, Texas commercial real estate prices, it might as well be California now, because a lot of the Californians have pushed out there, a lot of the tech companies have pushed out there, but the city is vibrant and growing. So if you've been in this one city, you feel like you've got what you can get from there, maybe it's time to go to another city or another state, another area in general, or maybe you're in like a low cap rate market like the Bay Area, and you want to sell and you want to go out into an area where you can, for market prices, double your cash flows. Like for instance, you sell your property here in the Bay at a 4 cap, and let's just say you go to the Midwest and you buy a 7 cap or an 8 cap. Just in and of itself, without getting a great deal in that respective market, just market for market, you're going to make more money. You're going to make more cash flow. Let me just say that right. And that is attractive to a lot of people. But the key is buying in a better neighborhood / area for your criteria. And that could be, I'm big on downtown Stockton right now. A lot of people, I'm big on downtown Stockton. I see a lot of things I saw in downtown Oakland, 15, 20 years ago in downtown Stockton, right? So I'm telling people that, and I'm telling people that, and some people say, well, I drove by it, man, and I don't know, man. I've seen some of those guys walking around and some of those people, moving around, and I don't know about downtown Stockton. However, I think in the next 5 to 10 years, that is the place that you want to invest, and it's going to see a lot of growth. So if you took your money out of somewhere that's stagnant and you put it in that area, you're winning. And that's why I say point number 2, buying in a better area. Now, point number 3 is better or more efficient management. Also, what you could put in this category is no management, such as if you sold an apartment building and you bought an absolute triple net, single tenant, absolute triple net property, meaning that the tenant Give you an example, like a Dollar General, they're paying the taxes, property taxes, they're paying the property insurance, they're paying the common area maintenance. And they're even doing things like if the roof breaks or leaks, they're fixing the roof, they're fixing foundation, they're fixing plumbing. It's absolute triple net. So the landlord's responsibility is just make sure that they stay a tenant and collect the rent. So that could be a great retirement play for someone in the apartment business who's wanting to just get that mailbox money or that direct deposit money. Okay, excellent way to do that. And or maybe you have a fourplex and then you sell and you buy a 20 unit. And now maybe you have the economies of scale to hire a property manager. Now your management can be more efficient. And so that's the key about this, is that making sure that you put yourself in a better situation. Not just, I see this money and I don't pay taxes on it. We all don't want to pay taxes on it. That's why we're doing an exchange. You got to acquire a better asset in a better location with better management. And the fourth thing I would want to say, you just want to feel better about it. It's something you want to tell your friends about, something you want to share with your wife or your husband. Hey, we got this deal. I feel better about this one than I felt about that one. That's a non-technical thing, but at the end of the day, that might be the most important. So when you go to sleep at night, you feel great about this property. You feel great about this move. What you don't want to do is sell the property you have, buy something that you don't feel good about, that you're not making as much money in a better area you don't know about, and something that is even a more of a hassle or headache than it was that you sold. That requires having a team. That requires planning, putting the right things in motion so you can make that happen, because it's not easy. So if that's something that you're interested in, make sure you network with us. Click the link below. Let's book an appointment. Let's talk. But make sure, bottom line is, you buy a better asset to satisfy your exchange and to fulfill your investment goals. I hope this was helpful. If it is, throw me a like, subscribe, share this with someone. Let's continue to keep building upon the best practices in commercial real estate. Have an excellent day.